Good morning, everyone. Happy Tuesday. It is Julie here with your TipRanks pre-market morning update, where we are covering everything you need to know before the market opens. I am here Monday through Friday with videos out before the opening bell, so make sure that you subscribe to the channel and turn on those notifications so that you stay up to date with all of our latest videos. In today's video, we are covering stock market news, our biggest gainers and losers so far this morning, plus some notable earnings reports. So here we go. US stock futures are looking stronger today as the Dow futures are currently up about 0.4%, the S&P 500 futures up about 0.93%, and NASDAQ futures up 2.11% thus far. And technology stocks look like they may be setting up for a potential rebound after recent sector weakness. One example of this is Tesla, who after closing the day yesterday down about 5.8%, is now up over 5% in the pre-market so far at $592 per share. Now, Tesla is one of my favorite stocks to watch analyst ratings on because they're always quite diverse. And that certainly remains the case. In the last 12 days, we have 6 different analysts who have updated their ratings, and it's a mixture between holds, buys, and sells. We have one hold from Daniel Ives that has a 68% potential upside, a buy rating with a 56% potential upside, and a sell rating from yesterday with a downside of 68%. So definitely some mixed emotions from Wall Street on Tesla. Now, another stock that also has some mixed emotions surrounding it is GameStop, who after closing the day up 41% yesterday is set to open above $200 today as they're up over 9% in the pre-market. Today, there is another hearing with the Senate Banking Committee entitled Who Wins on Wall Street? GameStop, Robinhood, and the State of Retail Investing. That will be live streamed at 10 a.m. Eastern Time, and it is said that some witnesses will be testifying to the market disruption of the GameStop saga, and other panelists will be defending Robinhood's business model. Moving over to Ultragenics, who announced that the FDA has approved its investigational new drug application for an experimental mRNA therapy designed for the treatment of GSD3. Following the FDA clearance, Ultragenyx expects the 2-part phase 1 and 2 clinical trial in adults to begin in the second half of 2021. Despite this news, Ultragenyx, under the ticker RARE, ended up closing the day down nearly 3%. We also had an announcement from software security company McAfee Corporation, who announced the divestment of its enterprise business to a consortium led by Symphony Technology Group. The all-cash deal worth $4 billion is expected to close by the end of 2021. McAfee said that the deal will help it become a pure-play consumer cybersecurity company and allow them to singularly focus on our consumer business and accelerate their strategy to be a leader in personal security for consumers. They closed the day yesterday up over 12.5% and are so far up nearly 1% in the pre-market. And we also had an announcement from DuPont, who has agreed to buy Laird Performance Materials, an electromagnetic shielding products maker, in a cash deal worth $2.3 billion from a private equity firm. DuPont is looking to fund the acquisition through existing cash on hand and is expected to close in the third quarter of this year. Additionally, DuPont's board of directors approved a new $1.5 billion share buyback program. Shares of DuPont were up slightly as the close of yesterday at $75.20 per share and are holding steady in the pre-market. Now looking at some of our biggest gainers and losers in the pre-market so far. Starting off with a company who is on this list for the second day in a row and is also one of our most actively traded this morning, and that is Second Sight Medical Products. They trade under the ticker EYES, and yesterday they closed the day up over 100%. So far in the pre-market, they're up another 71%. Now, EYES stock has skyrocketed in the last couple of trading sessions after the FDA approved the company's treatment of retinitis pigmentosa. Other big movers include Anpac Biomedical Science under ANPC, who's currently up 80% in the pre-market, as well as Invo Bioscience under INVO, who is up 67% so far. Now, taking a look at our biggest losers so far this morning, We have Acadia Pharmaceuticals under ACAD, who after closing the day down 6.5% yesterday, is now down another 44% so far. And Waiter Holdings under WTRH, who is actually up over 5% yesterday, but is now down nearly 15% in the pre-market today. As well as Stitch Fix under SFIX, who was down about 6% yesterday and is now down over 21% in the pre-market. Now moving to some of the more notable recent earnings reports. Starting off with Synchronoss Technologies, who actually fell 6% after the bell on Monday, despite reporting better than expected Q4 results. A non-GAAP net loss of 19 cents per share was significantly narrower than the street's estimates of a 53 cents loss per share, but wider than the 6% reported in the year-ago quarter. Revenues declined about 23% year-over-year to $69.4 million, topping analyst expectations of $67.7. However, the company forecasted 2021 revenues that came in below consensus estimates. They did, however, pick up a couple new buy ratings from analysts yesterday and today, with upside potentials of over 60 and 120%. We also had earnings from Shift Technology, who is actually up over 14% in pre-market trading, after ending Monday's trading session 4% lower. The end-to-end auto e-commerce platform reported a fourth quarter net loss of 7 cents per share, compared to analysts' expectations of a 42-cent loss per share. Revenues surged 168% year-over-year to $73.4 million, outpacing consensus estimates of $73 million, and the company projects 2021 revenues to exceed $450 million versus the analyst forecast of $392. They also picked up a few new buy ratings and one hold, with upside potentials of 82 and 95%. And we also heard from National Cinemedia, who is trading down about 3.3% in the pre-market following the release of worse-than-expected Q4 results. Revenues declined 89% year-over-year due to the pandemic-led theater closures, and a loss of 62 cents per share in the fourth quarter was worse than the 17-cent loss per share that analysts estimated. However, their total sales in the quarter of $15.7 million did top analyst expectations of $14.5 million. Their Q4 attendance fell 92% year-over-year, and the company did not provide 2021 guidance. They did pick up a couple new buy ratings today with upside potential of 15 and 26%. Some of the companies expected to have their earnings reports in the after hours include MongoDB, H&R Block, and Aero Environment. So that is Tuesday's pre-market morning update, bringing you up to speed before the opening bell. If you enjoyed today's video, make sure you hit that thumbs up button, leave your thoughts in the comments down below, and make sure you tune in tomorrow morning to catch our Wednesday pre-market update. Thank you so much for watching, and we will see you back here tomorrow.